When would that happen? Look, if the next halving we add another zero, so we go from 10,000 to 100,000, and then we get that speculative bubble in 2024, 2025 that pushes us into speculation, could we get to 250? 200 is probably more likely, but 250 is possible. If you break out the 4-year cycle into 4 seasons, winter, spring, summer, and fall, you tend to get about a 15-month period for crypto winter and crypto summer, and then 9-month periods for crypto spring and crypto fall. We had crypto winter. We peaked in November of last year around 67,500. The fair value at that time of the Bitcoin blockchain was probably somewhere in the high 20s, right around 30,000. And we were too high. There was too much leverage in the system. That all got reversed when they approved the Bitcoin futures ETF instead of the spot ETF. And by approving the futures ETF, you basically allow big institutions, particularly banks, to go short the Bitcoin market without actually having to have exposure to the underlying Bitcoin. And that put downward pressure on prices. That led to liquidations of leveraged speculators and gamblers, led to the crash and the bear market. And I believe that relentless downward movement ended on June 13th. We were stuck in this descending triangle. We were stuck around 30,000 and we were bouncing, but each bounce was lower. And it's this terrible chart pattern called a descending triangle. Well, we didn't get all the way to 15. We got to 17.5 on that wick down on the 13th. And so I think that was the bottom. I think that was the cathartic bottom. I think we're in crypto spring. And spring doesn't mean straight up, right? That's summertime, parabolic move, more speculators. Spring is kind of yuck, right? It's kind of windy, it's kind of rainy, it's kind of muddy, and we kind of just bounce along and consolidate. And I think that's where we are. I think we're in this 9-month period from kind of June to first quarter of next year where, we consolidate. We gather momentum for the next crypto summer, which will anticipate the halving in early 2024. I think people mistakenly classify Bitcoin as a risk asset. It's not. It can have periods of time where it functions similar, or I shouldn't say functions, where it acts similar to a risk asset because of the types of market participants that are participating in the market. When you have a very illiquid market like that, it is prone to booms and busts driven by market activity. People say, oh, well, it didn't act as a store of value. Well, no, it actually did. So the Fed from 2020 to 2021 printed half of all the dollars. Bitcoin went from 10,000 to 20,000. Exactly what it should have done. But it went to 70,000. That had nothing to do with Bitcoin. That had to do with speculation and gambling. And so if we look at today, the fair value of the network has fallen back down to 20,000. Well, why is that? Well, fewer transactions, less writing to the mempool, smaller transaction sizes. There have been fewer actual participants in the Bitcoin network. And that's because people saw the price fall and they freaked out and they backed away. And so now we're at this really interesting place where the fair value and the actual value are very tight, and people are waiting for this big macro pivot. It's probably not coming, right? The Fed's probably not going to double the money supply again. So we're probably not going to have a devaluation-induced price rise. Ultimately, I view these markets as not correlated and independent of one another. And people say, oh, but Bitcoin and the markets were correlated from November to June. Of course they were. In liquidations, in bear markets, in liquidations, everything's correlated. International stocks, emerging market stocks, US stocks, bonds, everything goes down. Again, because liquidations are different than bear markets. Liquidations are when there's too much leverage in the system and people are forced to sell. Higher rates probably means lower growth rates in the future, because we got, tighter liquidity conditions, which means I probably want to have less exposure to growth assets. I probably want to have more exposure to diversifying assets that protect my portfolio. Well, bonds don't work in a rising rate environment. So how about digital assets? And my belief is that people will look at the digital assets and look at the long-term data and say, they're quite uncorrelated to other assets because the drivers of digital assets are not the same as traditional assets. Traditional assets are driven by economic growth, Fed policies, inflation. Crypto is driven by the technology itself, millennial adoption. That digital divide is so acute and so wide. And what people miss, I think, is there's 37 odd trillion dollars with a T, trillion, that's going to go from my generation, the boomers, to your generation, the echo boomers. That's a lot of money. That money, I believe, it's going to migrate into the digital asset ecosystem and put, constant rising pressure on prices. The 4-year cycle is alive and well. And, the next halving occurs, January, February of 2024. And usually the market will anticipate that by about 9 months. So we're talking about, April, May of next year. And then, and remember, it feeds upon itself. So the first investors come in because they look at the value and then they look at the price and say, well, the price is below the fair value. So if the value of the network is around 20,000 and the price is 19,000, I'm going to buy that. Then as the price moves up into the low 20s and the value starts to creep up, now the traders just get involved because they're like, oh, it's moving, it's going up. Well, then what happens is people look at the halving and say, well, if the block rewards get cut in half to 3.25 from 6.25 to 3.125 from 6.25, then the price has got to double-ish in order for the miners to continue to make money. Now, the miners can get a little more efficient. They can maybe move to lower price electricity. But bottom line is the price has got to roughly double. Now, it's a great question. So, look, the 250 comes from simple math. It's 3 to 5 years, and it comes from simple math that if we take gold, the gold value in the world is 10 trillion. But half of that doesn't count, right? It's chalices and jewelry and stuff that you can't really use. The other half is the monetary value, the bricks and bars that sit in people's, accounts and, Fort Knox and, Swiss bank vaults and all that stuff. That's 5 trillion. 5 trillion, okay? If you think about 21 million Bitcoin, it's probably less than that. You do that math and you get a 250K number. Okay, that works for me. So gold equivalence is about 250K. When would that happen? Look, if the next halving we add another zero, so we go from 10,000 to 100,000, and then we get that speculative bubble in 2024, 2025 that pushes us into speculation, could we get to 250? 200 is probably more likely, but 250 is possible.